Hello, traders. Welcome back to Lucro. Today, we continue our Market Wizards series and move into the next chapter of this journey, breaking down the following 5 powerful trading psychology lessons revealed in Market Wizards, written by Jack Schwager. If you have ever felt confident in your strategy but struggled to stay consistent, if patience failed you during losing streaks, or if emotions pushed you to act when you should have waited, you are not alone. These challenges are not personal flaws. They are part of the trader's path. What separates traders who survive from those who disappear is not intelligence or prediction. It is execution, patience, and emotional alignment with risk. Market Wizards stands out because it shows how top traders handle uncertainty, pressure, and long periods where discipline matters more than ideas. In this part of the series, we continue extracting real lessons from legendary traders featured in Market Wizards. These are not motivational concepts. They are behavioral frameworks shaped through drawdowns, mistakes, and decades of market experience. Most traders focus on what to trade. Professionals focus on how to think, how to wait, and how to survive long enough for their edge to play out. So if you like this kind of video, please like, subscribe, and turn on notifications. And join the Lucro community to support the channel and keep improving as a trader. Now let us explore the next 10 lessons drawn from the experiences of the Market Wizards themselves. Lesson 11. Patience is an edge. Many Market Wizards explain that patience is not passive, it is strategic. Traders like Jesse Livermore and Ed Seykota understood that most of the time, the best action is waiting. Markets offer endless noise, but very few high-quality opportunities. Impatient traders force trades, overtrade, and slowly bleed capital. Professionals wait for alignment, clarity, and favorable risk. They accept boredom as part of the job. Patience protects traders from low-quality decisions and allows them to deploy capital only when the odds truly favor them. In trading, doing nothing is often the hardest but most profitable decision. Lesson 12. Position size controls emotion. A recurring theme in Market Wizards is that emotional instability is often a sizing problem, not a psychological flaw. Traders like Larry Hite emphasize that when position size is too large, fear and hesitation automatically appear. When size is appropriate, execution becomes calm and rational. Professionals adjust size so that no single trade can disturb their emotional balance. This allows them to think clearly and follow their plan. If a trade feels stressful, size is usually the issue. Correct sizing keeps emotions quiet and decision-making sharp. Lesson 13. Drawdowns are part of the game. Every successful trader in Market Wizards experienced drawdowns. What separates survivors from failures is how they respond to them. Professionals do not see drawdowns as personal failure. They see them as a statistical and psychological test. During drawdowns, they reduce risk, review execution, and protect capital. They do not try to win it back quickly. Traders who panic during drawdowns often abandon their edge at the worst possible moment. Acceptance and control during drawdowns is what allows long-term survival. Lesson 14. You must know yourself. Many Market Wizards stress that self-awareness is as important as market knowledge. Different traders succeed with different styles because they align their strategy with their personality. Some trade fast, others trade slow. Some focus on trends, others on mean reversion. Problems arise when traders copy strategies that do not fit who they are. Professionals design systems they can execute comfortably. They know their strengths, weaknesses, and emotional triggers. Knowing yourself reduces internal conflict and increases consistency. Lesson 15. The market owes you nothing. A powerful lesson repeated throughout Market Wizards. is that the market does not care about your opinions, needs, or past performance. Traders like Paul Tudor Jones understood that entitlement is dangerous. Every trade is independent. Past wins do not guarantee future profits. The market can change at any moment. Professionals approach each trade with humility and neutrality. They take what the market offers and walk away when conditions are not favorable. This mindset keeps them flexible, objective, and emotionally balanced. Lesson 16. An edge is meaningless without execution. Many traders spend years searching for the perfect strategy, believing that once they find it, consistency will follow automatically. Market wizards reveal a very different reality. An edge only matters if it can be executed repeatedly, calmly, and without hesitation. A simple edge applied with discipline will almost always outperform a complex edge executed inconsistently. Professionals do not obsess over constantly improving strategies. Instead, they focus on executing the same rules correctly, trade after trade. Execution is what transforms theory into results. Without execution, even a statistically sound system becomes nothing more than an idea. In the end, markets reward behavior, not potential. Lesson 17. Losing streaks test belief, not skill. Every trader, without exception, goes through losing streaks. In Market Wizards, these periods are described not as technical failures, but as psychological tests. The system did not suddenly stop working. What is being tested is the trader's belief in their edge. Professionals understand that drawdowns are part of the probability distribution. They do not panic or abandon their method at the first sign of discomfort. Instead, they rely on data, experience, and discipline to stay consistent. Traders who constantly switch strategies during losing streaks often compound losses and destroy confidence. Stability during adversity is what allows probabilities to normalize over time. Lesson 18. Independence of thought is essential. Top traders think independently. They do not depend on opinions, news headlines, social media, or market consensus to make decisions. Market wizards repeatedly warn about the danger of following the crowd. When everyone agrees, risk is often already priced in. Professionals build their own frameworks, test their ideas, and trust their process. This independence allows them to act decisively when others hesitate, and to step aside when others chase emotionally. Clarity does not come from external validation. It comes from preparation, experience, and self-trust developed over time. Lesson 19. Preparation reduces stress. Stress in trading usually comes from uncertainty and improvisation. Market wizards show that preparation is the antidote. Professionals prepare scenarios before the market opens. They know in advance where they are interested in acting, where they will exit if they are wrong, and where they will stand aside. When price reaches those areas, decisions have already been made. This turns trading into execution rather than reaction. Traders who prepare thoroughly experience less emotional volatility during the session. Calmness is not created in the heat of the moment. It is built before the trade even exists. Lesson 20. Long-term thinking changes everything. One of the strongest themes across market wizards is long-term thinking. Professional traders do not judge themselves by a single trade, a single day, or even a single month. They think in series of hundreds of trades. This perspective removes emotional pressure and reduces impulsive behavior. Short-term thinking creates urgency, fear, and overreaction. Long-term thinking creates patience, discipline, and consistency. When traders truly adopt a long-term mindset, losses feel smaller, wins feel normal, and decisions become clearer. The moment trading stops being about today's result, performance begins to stabilize. And with these lessons, we close this chapter of our Market Wizard series. What you have seen here is not theory or motivation. These are behavioral frameworks tested by traders who navigated losing streaks, uncertainty, and long periods where discipline mattered more than confidence. The pattern is consistent. Progress does not come from forcing trades or chasing results. It comes from patience, preparation, risk control, and execution. In the next video, we will continue this journey and break down the final set of lessons from Market Wizards. We will go deeper into long-term thinking, belief during difficult phases, preparation routines, and how professionals stay consistent over hundreds of trades. If you want to understand how elite traders maintain clarity when most people lose focus, you will not want to miss the next part of this series. Please also remember that our mission here on the Kamlukro channel is to give traders the clarity and confidence they need to make smarter decisions in the market. Every video, every course, and every piece of content we create has one clear purpose: to deliver practical, easy-to-apply knowledge that helps you grow step by step as a trader. Here on the channel, you'll find complete courses on smart money concepts, technical analysis for day traders, and trading psychology, because trading isn't just about charts, it's also about mindset, discipline, and risk management. We also share lessons and insights from some of the most respected names in trading, professionals like David Paul, Alexander Elder, Tom Hugard, Mark Douglas, Al Brooks, Larry Williams, and many others whose experience has shaped the way we understand the markets today. If you enjoyed this video and found it helpful, please give it a like. It really helps more traders discover our content. And don't forget to subscribe and turn on notifications so you never miss our latest insights and strategies. If you'd like to go even deeper and access exclusive content, early video releases, and additional tools to support your development, consider joining the Kamlukro trader community right here on YouTube. It's a simple way to support our work and a smart investment in your own growth as a trader. Thanks for watching, and I'll see you in the next video.